China's economy is tapping the brakes. It expanded by 6.2% in the second quarter. That is the slowest pace in 27 years. Is this going to help move along the U.S. and China trade dispute, maybe get us to a solution? Let's bring in Doug Flynn, certified financial planner, co-founder of Flynn Capital Management, and Todd Horowitz, chief strategist at BubbaTrading.com. Hey, guys, good morning.
Good morning.
Todd, first to you,
Cheryl.
does this weak number, like, I can't believe I'm saying 6.2% GDP growth this week, but, for the Chinese it is, and this is lower than their first quarter read. Do you think that helps push us towards a deal with them?
Cheryl, I don't know if it will or not. I think that, first of all, getting numbers of China is always iffy if they're accurate to begin with. I think they're willing to try to wait it out. However, on the other side, they're going to get a deal done. I don't think there's any question. I think the biggest part of the deal right now is just the way that they put it together, where both presidents come out looking like they've done the right thing for their countries.
And Doug, as we look at the numbers coming out of China, exports obviously were down. We're also finding out that a lot of U.S. manufacturers are now moving their supply chains out of China, looking for other avenues. That's going to factor into second quarter earnings. What are you expecting to hear from these CEOs and these CFOs, more importantly, and their commentary on the tariff war?
I think that most of the firms have not really had a major impact. There's a slight impact on some of the companies, and they're trying to do the things that you mentioned to move some things to different places, but that takes a little bit of time. So it might have a slight impact in the near term, but in the long run, that's what companies do, is they need to adjust on the ground and change their supply chains and keep their growth going, because that's what they're hired to do for the shareholders. And I think that's going to continue. You're going to see that in the third and fourth quarter where things pick back up again.
Let's move on to the economy, guys. I want you to listen to an interview that Jerry Baker had with Glenn Hutchins, of course, co-founder of Silver Lake. Listen to what he said about the economy.
What's more important here in this balance? The concerns about the economy or the fact that interest rates are going to be going down?
I think the concerns about the economy, if the Fed chooses to reduce interest rates, and I have no doubt if they do that, it will be because of solid and thoughtful and deeply reasoned economic analysis.
You don't think President Trump's leaning on them too hard?
Zero.
Todd, what do you make of that?
Well, I don't look. I think the Fed is trying to be independent. I think Powell. I think actually the fact that the president is pushing on Powell may keep him from lowering rates. But if they lower rates, I think they're making a mistake anyways. I think this entire situation is ridiculous. If our economy is as strong as they think it is, and we say it is, then there's no reason to lower rates. If they lower rates, they're taking away ammunition for later, because I already think that we're almost in the very early stages of a recession here. So I think that if they lower them now, they're making a mistake into a market that's at all-time highs.
But the market loves it. It's like giving candy to a baby, and they want more candy. They can't stop themselves. Really quick, I want to move on to Facebook before I let you guys go. Doug, this is to you. Sure. Elizabeth Warren, obviously you got this big fine against Facebook now that's been settled, $5 billion. Elizabeth Warren said that she's going after them from a political standpoint, saying that they made $5 billion in profits. They're too big. They need to be broken up. We've got hearings this week, antitrust committee in the House. What are you expecting, and what do you make of her call to break up Facebook?
Yeah, I think the Democrats definitely want more oversight and possibly a breakup. And I think, a fine, they've already worked that into their earnings. They already set aside $3 billion of the $5 billion. And I don't think the money is going to really be as big a detractor as maybe some might think it should be. So I think there is going to be some push to break them up, although other companies that they've tried to break up, and whether they have or they haven't, in the long run, they find a way to come back together. Yeah. So I think it's a short-term type of a thing.
Yeah, I mean, $5 billion to Facebook probably is $5 to me. One of you, I think, said that this morning.
Exactly.
Doug and Todd, thank you very much. Appreciate it, guys.
Thank you.